Oh my god, I look like a clown today. What is that? Who did my makeup? It was me. I did it. Hi friends, Daniellecheche here. Today we're going to talk about all the fun things that you can trade. As you may have noticed, I have a tendency to accidentally call everything a stock sometimes, and that's not always the case. As we discussed in the first video, stocks are pieces of ownership in a company. Commodities, on the other hand, represent tangible goods such as gold, oil, and livestock. Anything that's mined, like gold and oil, are hard commodities, while agricultural products like livestock are soft commodities. Commodities are actually sold on a completely different marketplace as well. Since supply and demand affects commodities, they tend to be more volatile. They're also better for short-term investing since you'll most likely use a futures contract to trade them. We'll get to futures in a second. Oh shit, that was a dad joke opportunity. More on futures in the future. You can also trade bonds, which are basically like a loan that you give to a company. They pay you interest on a predetermined schedule, which is generally annually or semi-annually. And then once the bond has matured, the principal is repaid. So like if you were a baby and your grandparent gave you a bond, by the time you and the bond had matured, the principal on the loan is repaid and you get some money. Risk is low on these. So while a stock is a piece of ownership in a company, a future is a contract to track a specific benchmark index. A futures contract is a legal agreement to purchase a security for a predetermined price at a predetermined time in the future. Get it? Because it's a future? As a buyer, you'd be obligated to buy that future if it reaches your predetermined price, and as a seller, you would be obligated to sell. Speaking of futures, don't forget to like and subscribe so my channel has a future. You also have the option to trade options. Unlike futures, options aren't obligations to exercise your contract. It merely gives you the right or option to do so. Nobody hates me more than I do, okay? Honestly, options are pretty deep and a little convoluted, so it's definitely gonna be its own video. But here's what you need to know for now. If you can figure it out, you can make some pretty decent money trading options. You don't need as much to get started. It's less risky than trading stocks. You could have higher returns, and you just kind of set it and forget it for the day. This is definitely not paid, but with Webull, they approve you for options by level, so you're only able to utilize certain strategies. That way you can't get in over your head. I haven't tried other platforms yet, so I can't objectively guide you one way or another. I'm currently working on that. I'll make sure I work it out before I make a whole video dedicated to options. Okay, let's talk about ETFs, or exchange traded funds. Instead of just trading one asset, ETFs are a whole buttload of assets. Think SPY, which tracks the S&P 500. There are so many different kinds of ETFs to trade. You have stock ETFs, which is a buttload of stocks. You have bond ETFs, which could be government bonds, corporate bonds, state and local bonds. And unlike regular bonds, they don't have a maturity date, like me. I'll never mature. And they're also used to get money on the reg. Industry or sector ETFs focus on a specific industry or sector, like energy or technology. Commodity ETFs, which diversify your portfolio, and we're gonna talk about that soon. So if the stock market takes a dive, you still have cushion in your commodity ETFs. And it kind of goes without saying, but holding commodity ETFs is a little bit easier than just hoarding a bunch of gold, for example, or cows. Currency ETFs can be used to hedge against Forex volatility as well as inflation. Finally, there are inverse ETFs, which is basically like shorting a stock, which we discussed in video 2, except it's a buttload of stocks. Since we're talking about ETFs, we should probably discuss index funds. The two are actually really similar. They're both a collection of assets as opposed to just one singular asset, like an individual stock. Both are great for long-term investing and tend to have high returns. However, for intraday trading, ETFs are best. ETFs are like trading stocks where you follow the market throughout the day, whereas index funds can only be bought or sold for the price that's set at the end of the day. So for long-term investing, you could go with either, but for day trading, probably best to go with ETFs. Index funds also tend to have a minimum, whereas ETFs can be traded like stocks, so you can buy fractional shares. If you're interested in index funds, you should also look into the capital gains that you would have to pay. It tends to work out a little bit more in your favor with ETFs. Mutual funds are also a collection of different stocks. They're actually professionally managed, unlike index funds and ETFs, which just track benchmarks. So it basically takes the guesswork out of choosing your stocks. It's one transaction and bam, you're diversified. However, you pay for that convenience. Obviously, when you buy or sell a stock, you pay a commission. A mutual fund could also have annual expense ratios, sales loads, short-term redemption fees, as well as transaction fees. I mean, you have someone managing your mutual fund, so of course it's going to cost more than something you would do yourself. Next is Forex, which stands for foreign exchange. I see what they did there. It's a worldwide market for exchanging what? Foreign currency. A lot of drama surrounds Forex right now, so get ready because you know I love drama. There's a whole scammy element to it. People are actually turning it into a pyramid scheme. Basically, you join this company to trade Forex, right? But in classic MLM form, they make you purchase trading materials, then offer you a commission to bring in new people. So instead of actually trading Forex, you're a recruiter. It's wild. It's also a bit riskier than trading stocks. About 80% of people get out of trading Forex within the first 2 years. The riskiness of it all, plus the high fail rate, sounds like an obvious MLM to me. Now, keep in mind, this is just a few companies, but it seems like an important warning. I don't want anybody out there to get taken advantage of. However, if you're super skilled and really know what you're doing and can avoid the MLMs out there, it may work out for you because as we all know, more risk means more reward. Usually. Just be careful. Aside from the scams, it's unpredictable since you're trading foreign currency. Finally, my favorite asset to trade because I could do it in the middle of the night in my PJs, cryptocurrency. It's not bound by the PDT rule and markets are open all of the time. Does your depression also cause you to stay awake all night thinking about literally everything that has ever happened to you in your life? Can't relate. Well, take advantage and make some money, honey. Ugh. Hate it. While it's most volatile during market hours, you can still trade anytime. Doge, Doge, whatever. It was still a moneymaker for a while. It was great for day trading. I'm sure you all heard about it. Heck, it might even be the reason you're here now. I don't believe crypto is going to go away anytime soon, especially the bigger, more established coins like Bitcoin. So they might actually be good for long-term investing as well. We've all heard stories about the people that have held Bitcoin since the beginning and are loaded now. Just make sure you diversify your portfolio so you can mitigate as much risk as possible. Well, that's all for today. Don't forget to drink your water and take your vitamins. Love you. Bye.